Warren Buffett, How to Invest for Beginners. When a person with money meets a person with experience, the one with experience ends up with the money, and the one with the money leaves with experience. This was Warren Buffett's response on his 87th birthday when asked about his best investment advice. He says that experience is the ultimate key to be a successful investor. However, what about those who are new to investing? What if you don't have any experience? Well, fortunately, you can learn from investors who do have experience. Investors like Warren Buffett himself. If you're a subscriber, welcome back to Investing For You. But if you're new to this channel and you want to enjoy more of our engaging content, make sure to click that subscribe button and use that trigger finger by smashing that like button. Now, let's get into it. Tip 1. Diversification is not always a good idea. Wide diversification is only required when investors do not understand what they are doing. That's a direct quote from Warren Buffett, who makes his case against diversifying stocks because it's, quote, protection against ignorance. In other words, have faith in the investments that you do make, and have a long-term mentality in seeing rewards from them. Many good investors stress the importance of diversification, but Warren Buffett tends to disagree with the idea. Buffett says that diversification is for people who don't know much about investing. An experienced investor should choose stocks on a long-term basis and should have faith in his or her investments. Some investors diversify their portfolios because they're afraid that any one stock might sink their entire portfolio. But while doing so, it becomes much harder to keep track of the current events impacting each company. So by diversifying, they might reduce the volatility of their portfolio, but at the same time, they reduce their focus on individual investments. Buffett waits for opportunities to buy good stocks, and when those opportunities come his way, he takes full advantage. According to Buffett, when it's raining gold, put out the bucket, not the thimble. 2. Invest in yourself first. Need some motivation to believe in yourself? Allow this quote from Warren Buffett to do the trick. As the Berkshire Hathaway CEO once said, "The best investment you can make is in your own abilities." Anything you can do to develop your own abilities or business is likely to be more productive. If you don't have confidence in your strengths as well as identify and work on your weaknesses to get better, you're doing yourself an injustice. Most people are not going to make most of their money from the stock market. They're going to make it from their careers. So put yourself first. Buffett's partner, Charlie Munger, had a similar thought. Munger's secret to success? Sell yourself an hour each day and use that hour to make yourself better. Investing in yourself is paramount to doing great things and applies to more than just investing. According to Paid Surveys USA, 75% of Americans invest in themselves first. How great is that? Tip 3. Trust yourself to be a successful investor. What do the words stock market expert really mean? Well, at first glance, they mean someone who has a proven track record of success in investing in companies, right? Even so, that person has lost, and plenty. Therefore, even a so-called expert should be challenged if your own gut is telling you so. This is a piece of advice that Warren Buffett believes in, understanding that, to be successful, it takes work to educate yourself and, sometimes, go against someone who, on paper, looks like he or she knows it all. Warren Buffett says that the hardest thing to do is to trust your investment decisions. You always think that others are right and you are wrong. Instead, you need to study and believe in yourself. Quote, "I always knew I was going to be rich. I don't think I doubted that for a minute," said Warren Buffett. To be successful, you need to overcome the fear and not pay attention to what others are telling you. Accumulate understanding and create investment choices to stand apart from the crowd and be a winner on your own. Tip 4. Make investments that you understand. Warren Buffett says that many people think quite a bit before making any investment, and sometimes think too much. Buffett cautions that you should never invest in businesses that you don't fully understand. He says that if before he invests in the stock of a company, he has to first understand how the company makes money and the main drivers that impact its industry in no more than 10 minutes. If he's not able to understand it in 10 minutes, he moves on to evaluate another company on that basis. You wouldn't give a friend money for a new business without looking over his or her business plan first to understand the concept, would you? We certainly hope not. Along those same lines, Buffett stresses the importance in investing in things that you know about, believing that if something is too complex to understand, simply focus on another business to invest in. Most people can't predict the next fashion trend among teenagers or whether or not a medicine will be successful in the market. Even if you had more data than anyone else, it's still impossible to predict the future with 100% accuracy. In situations that rely on an accurate forecast of the future, Buffett advises not to invest. If it's complex for you, just look at other businesses to invest in. Buffett once said that out of about 10,000 plus publicly traded firms, he would like to invest in only a few hundred companies before even taking valuation into account. We're halfway there. 4 more tips and you can already invest as a beginner, so stay tuned. Don't forget to click that like button and smash that subscribe button for more awesome videos. Now, let's continue. Tip 5. Make sure you choose the right news to focus on. Some individuals are not supposed to own stocks at all because they're too annoyed by price changes. If you're going to do stupid things because your inventory is going down, you shouldn't own stock at all, Warren Buffett said during a CNBC interview. Some people aren't really mentally or psychologically fit for their own stock, but I believe more of them would be, Buffett said, if they were informed about what they are actually purchasing, which is composed of a company. One of the best investment tips from Warren Buffett is to not put too much stock, no pun intended, into each and every news headline that you see. Buffett believes in the 99-1 rule. Most investors take action based on 1% of the financial news they consume. Doing so, they quickly sell their stocks whenever bad news comes up. Example, a company's revenues have fallen by 10%. If the company in this particular example has been in business for, say, 100 years, then Buffett says that it's definitely capable of withstanding such events. In other words, people often tend to overreact. As Vanguard's Jack Bogle might say, don't just do something, stand there. Tip 6. Buying a stock of a company is buying a part of a business. Imagine you're buying an ownership stake in the convenience store around the corner from your house. Automatically, you think about the competition, suppliers, prices, etc. You'll have to think both about the specific location as well as the competitive position in the market. Similarly, while buying stocks, you need to think about all these things, just as the people running the business do. When you buy a stock, you're not just buying a piece of paper or a ticker symbol. Buying the stock of a company is buying an ownership stake in a business. Remember that, friend. Tip 7. Learn from your mistakes and move on. You might be astonished to know that even Warren Buffett makes mistakes, big ones too. But he makes sure that he learns from his mistakes. Buffett advises keeping a record of the mistakes you've made so that you know what went wrong and make sure you don't repeat them again. Buffett further says that you should share those lessons with your children and grandchildren so that they know what mistakes not to commit. It's inevitable for a person to make mistakes, whether in the stock market or elsewhere. When they happen, Warren Buffett says that they should be accepted, learned from, and then moved on from. Sure, it'd be easy to stew over losing hundreds or thousands of dollars, but that doesn't make a person get any better. For Buffett, make mistakes, write them down, and know how to avoid them again. Tip 8. Don't be a day trader. According to Buffett, the secret to getting a better return on investment is to buy a stock and forget about it. He believes in having a buy-and-hold mentality and insists on holding stocks for decades. There are 2 principles behind this. 1. If you buy a stock for less than its true worth, the stock's price will eventually converge with its intrinsic value. 2. If you buy a wonderful business, the value of that business will compound and increase exponentially the longer you hold on to it. So, the patient investor will ultimately be rewarded if they hold on to their stocks for a long time. For Buffett, time is the friend of a wonderful business. Quote, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. He says that if you consistently buy and sell stocks, it'll take away a significant percentage of your returns in the form of trading commissions and taxes. So it's better to buy great stocks and hold on to them for a long time. Those are some wise words from a successful investor, Warren Buffett himself. Do you feel like investing now? Let us know in the comments below. And hey, if you enjoyed the video, don't forget to like and subscribe to our channel so we can continue giving you the best content. Thanks for watching, and we'll see you in the next video.